please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're still tuned into Power Breakfast this Wednesday morning, but let's apprise you of what took place back home on Dalal Street. The markets recovered from the day's low to snap what was its 5-day losing streak and ended mildly in the green. So the Nifty ended just shy of that 10,550 mark. The Sensex gained around 35 points. The Midcap index recovered to end 0.25% higher as well. The Nifty Bank too recovered after SPI rallied almost 4% post its fourth quarter numbers. That was really the kind of fabric that we saw. We saw Dr. Reddy's rally despite what was a poor set of numbers yesterday as well. But Mangalam, we had a big FII net sell figure. We had a big DII buy figure. What are the cues we need to watch for today?
Absolutely. We saw some selling at the top, and that is something that really stood out. And overnight, we got weak cues come by from Wall Street as well. Dow Jones, S&P 500 as well as NASDAQ. All of them ended lower. The Asian markets are lower as we speak. And this after Donald Trump said he wasn't happy with the way China trade talks were going on. And the summit with North Korea may not happen at all. But let's take a look at our markets. The SGX Nifty, for starters, indicates a cut of anywhere between 10 to 15 points on the red side. Now, actually, it's gone further lower to about 20 points. We'll keep an eye out on how it opens. It was good to see some green on the screen yesterday. The Nifty broke its 5-session losing streak. But remember, in the prior 5 sessions, the Nifty fell from 10,800 to about 10,500. So we saw a cut of almost 300 points. So perhaps that was some profit booking by the shorts or short covering. Because if you take a look at the Nifty futures and the Nifty Bank futures out there, the open interest came off, indicating that maybe perhaps those shorts have covered some of their positions. And that was also visible in the Nifty futures premium, which from 0 went to 22, and then from 22 in yesterday's trading session, while we went higher, the futures premium came off by about 5-6 points. And yes, while the markets ended higher yesterday, they ended off highs as well. So the Nifty PSU Bank was the one which fell about 2% from the top. The Nifty Bank Midcaps as well as the Nifty, all of them falling anywhere between 2 to 3% from the top. The Nifty Bank actually losing 0.6%. And then we got the data. FII sold about 1,650 crores in cash market. But mind you, the gross volumes were on the lower side. The FIIs continue to sell in index futures. Over the last 3 trading sessions, they have sold relentlessly, and their long exposure has fallen to 50%. Not just that, the put-call ratio, while the market has moved higher, has also moved lower, indicating that yes, there was consistent writing in index calls. Long calls were unwound, while there was further short covering in index puts. So the key levels to watch out for, where we are right now, 10,537, 538 is where the 100-day moving average is. So it'll be very interesting to see where the market goes from here. On the higher, 10,537, 538 is where the 100-day moving average is. So it'll be very interesting to see where the market goes from here. On the higher end, we have the 20-day moving average. On the lower end, we have the 50-day moving average, 10,460. But before that, we have the maximum open interest in index puts at 10,500, and at the upper end, 10,800 is the call in open interest.
Okay, and stocks?
A lot of stocks we'll be watching out for Tata Motors ahead of results today, but that is something we'll get you the preview of. But in the meanwhile, SBI, I would like to see how that stock pans out in today's trading session, given that it gained yesterday, and now the street will pour through all the earnings fine print, and we have a couple of EPS cuts come by from the brokerages as well. Cipla, Ekta, you were telling us the most important number to watch out for will be the EBITDA margin, and there the company has disappointed a fair bit. HPCL, the margins came in a tad bit below street estimates, as well as the calculated gross refining margins, they've come in higher, so we'll have to watch out for how that stock pans out. Bata, superb set of numbers, 7% growth as against 4.5% expectations. Margins superseded expectations by about 100 basis points, and the net profit too came in higher by almost 10% as against our estimates. L&T Tech also had a good set of numbers. CLSA, they have raised their target price to 1650 after a strong quarter. Future Consumer, the revenue growth was pretty heartening, 51% out there, but the EBITDA margins were a little below estimates, and because of that, the company posted a net loss on the bottom line. Andhra Bank, the total loss in the last 3 quarters for the company has been 3,500 crores, and the market cap of the company is close to 4,000 crores. So just keep an eye out on that one. Music Broadcast, good set of numbers. The EBITDA increased by 65%, and they've also increased their market share to 21%. TV today, revenue growth was 2%, well, the EBITDA grew much faster. Munjal Auto has made an acquisition 55% in Indus Composites technology. Gravita has entered into a contract with Amara Raja for lead acid battery scrap collection. That's primarily their business, recycling of lead. And Mukund, Sumitomo Corp from Japan, they bought 49% stake in the special steel subsidiary of the company for about 1181 crores.
Okay, all right, Mangalam, thanks very much for that. So that's on the markets, but on to some important market opinion from Ramdev Agarwal of Motilal Oswal on the sectors driving the market and the macro triggers for the economy as well.
The value migration story of the private sector, public sector to private sector, and in private sector you have not only the banks but the housing finance companies, the capital market companies like Motilal, Aiways, IFL. So that's a set of new companies which are coming up. Then you have all the private sector insurance companies again winning in a growing market at the cost of public sector. So insurance companies are becoming very large. Then you have then asset management companies are getting listed. So these are all growing sectors. They are almost like a sunrise industry for India, and particularly in the private sector hand. So the entire private sector finance landscape remains very opportunistic. Big opportunity in I would say at least for 3-4 years more. I see a major revival from the rural demand side, and there you are seeing motorcycle demand, your FMCG demand, and so all sorts of things which are related to the rural economy that will start playing into this thing, and that will lead to the demand on the industrial economy side. Oil per se as a cost of as a fuel to the economy, the cost of energy, and particularly in the form of crude oil, that is a very, very concerning thing. When he came, immediately after that the thing collapsed to 25, 27 rupees and $25 or $30. So that benefit was a huge tailwind for them. But there were other challenges at the micro level. So right now, I don't know how the world will negotiate, how rupee will negotiate, how the current account deficit will shape up. So that uncertainty is the biggest uncertainty I see in the markets for next 12 to 18 months.
Okay, all right, that's Ramdev Agarwal. Time for a short break now, but up next, the government calls the surge in oil prices a crisis situation. We'll get you more details once we're back. Well, spiraling fuel prices continue to dominate the headlines, with petrol diesel prices rising now for the 9th straight day. Top government officials are telling us that a decision on some relief measures is expected during this week itself. They say rising oil prices is a crisis and measures are needed to give relief to the consumers. We understand discussions are on at the Petroleum Ministry as the government needs to be mindful of the fiscal impact of any possible excise cut. The government official also said that states must cut VAT if excise duty is lowered. Let's listen in to what Narendra Taneja and R.S. Sharma had to say on this issue.
No crisis, no, that's not how the government is looking at it. But the government is very sensitive, to the people's requirement, and very sensitive to the fact the prices, are a bit too high when it comes to the ordinary consumer. Very sensitive to that. If the people suffer, the government is, government also suffers. But that said, at the same time, but the government is looking at the whole thing, talking with various ministries, also talking with various states and other stakeholders. We have made these kind of commitments because of the reforms and modernization. All these companies are looking at India and come here to invest. So when that's the kind of image we have, that's the kind of reforms we have carried out, so there is no question of going back.
With the crude prices going up, these upstream companies have been contributing more in terms of the cess. And likewise, I think the government has made some strategic error. First of all, they went about, all these ambitious social welfare schemes they have launched, quite laudable. In fact, they need to be complimented for unprecedented kind of schemes which they launched. But they did not factor it where from all that money will come. One thing vehemently I would say, the subsidy sharing mechanism should not come back again. These companies will become very vulnerable.
Okay, well, let's get on with a CNBC TV18 exclusive now. We learned from sources that Dalmia Bharat will stick to its offer of around 6,600 crores for Binani Cement, even as the deadline for revised bids ends today. Ritu Singh joins in with all of the details on this important story. Ritu, go ahead.
The tug of war for Binani Cement continues, and now we understand from sources that a day before the deadline to submit revised bids for the company is going to end on the 23rd of May, Dalmia Bharat Consortium has decided not to revise its bid. Do remember, Dalmia Bharat bid in a consortium with India Resurgence Fund, and their bid stands at 6,590 crore rupees. This stacks up against Ultratech's bid of 7,960 crore rupees, and the Committee of Creditors had allowed both of them to increase their bid and to match each other before that deadline ended. But as it stands, Dalmia Bharat will not be revising that bid. 24th May, in fact, is the date when the lenders will be voting on the final offers. But Dalmia says it will wait for the final verdict from NCLAT before it makes any move, and that hearing is scheduled on the 10th of July.
Okay, well, thanks Ritu for that. But the 100-day-long protest by a section of Tuticorin residents against a smelting plant run by Sterlite Copper turned violent. At least 9 people were killed and several injured in the coastal city after police opened fire on protesters who torched police vehicles. A section of local residents have been protesting, demanding closure of the smelter plant for over 3 months now. Protesters allege that the smelter is polluting groundwater in their area and causing health hazards. Remember, Sterlite Copper is owned by the multinational mining giant Vedanta. Well, time for a break now, but up next, Tata Motors will be reporting its Q4 numbers today. Key expectations on the other side.